Hey guys, welcome back to another episode of Growth Path. Today, I'm really excited to have somebody on that I've spoken somewhat bit, but the first time I actually met you, Julius, you're not going to believe this. There was two times we met. The first time that I met you was at a swimming pool bar, and we were having a drink. This was in Romania this year, and then the next morning, after both of us had started at that swimming pool bar earlier in the afternoon beforehand, meeting at the breakfast buffet the next morning in the hotel. Probably wasn't in as good a form as I was maybe when I was at the bar the day before. But I won't tell you any secrets here. So yeah, I met Julius this year. We were at the TechPon Awards in Romania, and Julius was also there with some of the companies that he represents, or he was also there on behalf of ARRtist, I believe. But also he's got a whole portfolio of companies, which I'll get into now in a moment. But Julius, welcome.
Thank you very much for the intro, Andy. Two guys in a pool in Romania sounds a bit dodgy, but it was a business event to be sure here. Yeah.
It was the TechPon Awards, all above board, all fine, all fine. But just a bit of background on Julius, just so everybody knows who I'm speaking to here. So I went to your LinkedIn profile, did a bit of stalking, right? And I went to look, okay, all of your experience, right? And it said like to see 44 more experiences, click here. So I think that shows a little bit about your experience, but going back, I see that you started your career at McKinsey as a consultant, right? Then went on to Zalando, which is super interesting. So you were also the CEO of what was it, Zalando Lounge, right? Which was I remember working with Zalando Lounge back in my Immersis days. I think you guys were a customer of ours, if I'm not mistaken.
Could be, yeah.
There you go. And since then, has exited two different companies, has been an advisor and also an investor in over 30 companies. When I'm looking at your profile here, I'm based in Austria, and also you have some Austrian investments with the likes of Kickscale, with the guys I'm very close to, the guys at Kickscale, great guys. They've just received a round as well to start growing. I'm already starting to see them grow. And you also run or are a co-founder of the ARRtist Festival, which takes place in Berlin. And it's just taken place in Berlin 2 weeks ago. So just before this, while we were still before recording, Julius was telling me how he's just trying to find his brain again after that. But Julius, really, really happy to have you on, mate.
Thank you very much for this great introduction, Andy. Very, very, very thankful for this, and great to be here.
Sure, man. So tell us a little bit about, like, I'm trying to figure out what exactly you spend most of your time on, because you have ARRtist, and then you have all your investments, then you have all of your advisor to a ton of companies. You're also, I guess, running a fund, right? How do you do it? Like, and what's your main focus?
Yeah, it's a very difficult question because it's changing also, Andy. So I think first of all, I really like to build. Yeah, I'm an entrepreneur, and what I really love is 0 to 1, I call it, or 0 to 2 million ARR, or bringing just an idea to life. So this is what I really love, and this is what we did with ARRtist and Circus, and doing with a couple of other companies. And how do I do it? Of course, usually not alone. Usually nowadays together with great co-founders. So we can leverage skills, and we can also like cover for each other. So this is my main work is building companies. My second role is being an investor. So as you said, I'm investing very focused in early stage B2B SaaS companies. Of course the portfolio is growing, but there's usually just a few companies which are very early, so they outgrow, of course, or they get older. So like a minor share of my time is going there to help my portfolio companies if they need help. Yeah, so it's more like a demand driven thing. So I'm a resource, so they can leverage me. It's a smaller thing.
What's your superpower, do you reckon, Julius?
I think it's two. I think it's three. I think I see opportunities. So I think I'm very good in seeing and judging opportunities. I'm a good seller, so I can sell visions, I can sell ideas, I can sell to employees, co-founders, and also to customers. And I'm really execution driven, Andy. So it's like, okay, let's do it and let's go. So I don't overthink things, which sometimes could be also downside. But I'm really hands-on executor. Says, okay, this is the idea. Let's go. Let's do 80-20 now and see if it works. And then we do another 15%. But we should start. Yeah?
I think you and I have a bit in common, mate. I see it so often that like so many companies just don't execute. They just sit around waiting, building plans and thinking about, okay, what can we do? And well, let's get alignment with everybody and let's do this. And maybe we need to think of that. And for like, my rule is similar to yours, the 80-20 thing, right? Like, fuck it, let's just go, are we looking for approval from somebody you haven't gotten approval? Okay, let's just launch and beg for forgiveness afterwards,
Absolutely.
like the best made plans are only as good as their execution, right? So I fully agree.
Yeah, it's like a long run, 30 kilometers with a hill and the last 2 kilometers, and you think about all the time how to climb there. You don't start walking, but you have like still 6 hours to go. How to manage the hill? Yeah, so you have enough time to think about it, but you need to start walking, otherwise you will never arrive. Yeah, so yeah, and of course for some situations maybe it's better the other way around. If you have like high capital exposure, if you need a lot of money, if you do tech investments, yes, you should think very carefully before you start building.
Yeah.
But for many things, especially in go-to-market, it's such an iterative process where you need to try, measure, adapt, and then try again. Yeah, and I think speed is everything there.
I see a lot of the times with marketing teams, man. They're trying to build processes that run different processes, and then that process is going to ping another process, but then setting up an automation that will then set off a process. And I'm like, forget all that shit. Like, nobody's seeing any of this.
Yes.
You know what I mean? Like nobody knows that we exist. So let's just do stuff that makes people know we exist and forget about the process. Like, especially in the stage that you're talking about, like that's where I like to play as well. Maybe a bit beyond the 0 to 1, but like let's say 5 to 30, let's say, where you still can be agile, but you still have a bit of cash to maybe play with and things like that. But you don't need very robust processes like what you're going to see in an enterprise in order for a marketing team to perform at that stage. It's just going to slow you down.
Absolutely. I mean, don't get me wrong. This doesn't mean that along the way you should build these processes and automate as much as you can, gain efficiencies. Yeah. So if you're really bulletproof on your go-to-market motions, on your ICPs, on your messaging, then of course try to automate and gain efficiencies. But usually to reach this point, it takes a bit of time. Yeah.
I smiled there because I was like, show me one of those companies, man, that has their ICP nailed and has their knows their go to market and knows they have a machine working. It's still like the number one thing that people go to is we don't have leads, we're not creating demand, we don't know how to create demand. We don't have a functioning BDR team or sales team. They don't know how to do any outbound. The messaging is all over the place. We don't really know what our ICP is. What's a TAM? Oh, a total addressable market. Never heard of that. Like there's normally people pretend like if they're good at marketing, it's going to look as though that behind the scenes there isn't a rolling dumpster fire. But 95% of the times there's a rolling dumpster fire behind the scenes.
Exactly. Yeah, I agree.
But the ones that are managing to put on a good face on the front, they're the ones that are doing okay. Everywhere's a mess. That's my point. But it's just how big of a mess, right? So,
well said.
Yeah, but look, tell me a little bit about your background, because obviously you were with McKinsey for a little stint, and then you were at Zalando and had a couple of different positions at Zalando. So in the e-commerce world, people are not familiar with Zalando. Zalando's an enormous online fashion retailer based out of Germany. Probably the biggest in the market, if I'm not mistaken, right?
Yeah, I think so, yeah.
And from there, you went into tech, right?
From there, I went into B2B trading at first, Andy. So, as you said, at Zalando, I was responsible for all non-full price business units. So it was the Zalando Lounge, which was like a campaign-based model. I built the retail outlets there. So it was a project I have been running. And then I also set up a B2B business at the end of the value chain. So everything which was left then, plus customer returns with damages, we also needed to sell to somewhere. So I built up the B2B liquidation business. And my first company after Zalando IPO was, like I say, this is like a very unstructured and unmanaged market, this overstock trading. So I founded a B2B trading companies who was helping brands and retailers to get rid of their inventory, their excess inventory. So it was a B2B trading company. Second one was a B2B logistics. It had already a tech layer. So was B2B processes with tech combined. And from there on, I more and more went into recurring revenue and tech, started focusing my investment. So the last 5-6 years, I would say I'm doing tech only. B2B software only. But the transition was from e-commerce to B2B trading to B2B software.
Interesting. It's I just have some limited dealings with Zalando over the years, and I'll move away from Zalando in a moment. But there's a point behind this. I seem to remember that Zalando were always very keen on building their own tech,
Yes,
if I'm not mistaken. So you
correct.
probably learned a lot back then from what was going on behind the scenes at Zalando, right?
I mean, this was for me really like a fortune. I really was able to learn entrepreneurship without being a founder. So I was directly reporting to one of the founders. I had crazy responsibility, but I also had a security net above me, which was the founder. And yeah, it was VC backed. We built the whole tech for ourselves. Crazy growth. Like I joined with, I think, 120 employees. I left with 9,000. So it was really hyper growth within a very short period of time. And there I also recognized what I didn't like at the end, which was like more corporate management of big structures. Yeah. So I was very lucky to be a part of this crazy growth journey, but I also saw, okay, it's becoming very corporate here, budget planning, feedback loops every quarter, QBRs. I said, like, I want to build again. So this was the reason I also then left after IPO.
Oh, good. I mean, that corporate structure piece is not for me. Like that is, I'm very similar to you. I want to keep it moving. I want to be able to make quick decisions. I want to be able to move quickly and so on. And the bigger you get, the slower you become. It's inevitable, right? And
Yeah.
yeah.
And I mean, with corporate sectors, we probably would also not have met in the pool in Romania. Yeah, completely forbidden, probably, to do this.
Absolutely. That's the thing, you know. That's the thing. Yeah, that's a fair point. Like even things like I'm a big fan of things like direct mail and things like that.
Yeah,
You need to be super careful that you're in a B2C environment. It's different, but if in B2B, that's where I play. That's my playground. You need to be super careful with these massive corporates as well because they're not allowed to receive things like direct mail because it's seen as gifting and things like that. It's you
absolutely.
know,
So
yeah,
many rules, so many structures, and of course they come with a reason and they come with a
of course.
purpose, and it's necessary to run kind of this big corporations. But I think everyone needs to decide for himself: do you want to work in this kind of organizations, or do you want to work way more agile as a consultant, as a founder, as an agency owner, as a software guy? So yeah, and I'm very thankful that I have learned this very early in my life because it had a big impact on how I see freedom, how I value this freedom, how I like really feel joy in my own personal life. So I think many people never like come to this point at all in their life. So I was very happy to to make through this or to went through this journey.
Let's talk about that a little bit if you're okay with it
Sure.
personally, right?
Sure.
So like I know that you've got a young family, right? Obviously like you've got a huge amount of stuff on your CV. So as I said before, all those experience that I looked at LinkedIn, but there's a certain freedom to what you do because you're your own boss. If
Yes.
you're stuck up in a corporate structure, it's very difficult. Like you've got the golden handcuffs on, right? You can't spread your wings as much. Tell me a little bit about how you're what you're doing now and how that like gives you the feeling that you're free.
Yeah, I mean, what I'm doing now, Andy, I have like a kind of my own very small venture studio. So I see opportunities on the market or ideas I really like, and I try to build companies on that. And what we are, of course, need for this is like cool co-founders. So what we are right now doing, we are building a cold call agency a second time. We started this 3 years ago and exited it to a PE. We right now are starting a geo agency, like with two co-founders focusing on making B2B companies visible in LLMs. And right now we are thinking about kind of a peer group learning format, like we call it revenue circles, where we like to bring together 6 to 8 people on a regular basis for in-depth learning, non-competitive small groups in cities in Germany, because we think there is a lot of value. Very early stage, still in beta or piloting phase, the last idea. And this is the kind of things that we are trying to execute things where we see potential, where we have the feeling that could be also from a monetary perspective on a long term workable, and get cool people in with whom we are doing it. And this, of course, has big value for getting up in the morning. You work with people you like on topics you like, without investors, and without boring meetings where you need to align. And this is just great.
So you're just having fun, man. You're enjoying yourself, but it's actually helping. It's also adding to the bank account at the same time.
If it goes the good way, yes, of course. And also sometimes not goes. Everything works well. Yeah, there are also situations, external factors which influence business models where you don't have a chance. But of course, on a long term, on average, hopefully it's net positive. Yeah.
That's good, man. That's good. I want to talk about something because I've been based in DACH now for almost 20 years myself. Like I've been based in Austria for 17 years. I've seen massive changes happen in the Austrian market over the past maybe even 7-8 years when it comes to B2B tech companies. You guys are also invested in one, as I mentioned before, Kickscale, which is completely random, where they're based at Klagenfurt, which is just down towards in Carinthia, which is a beautiful spot. But the last place you think that there's tech companies coming is also, that's based off the back of a very successful company called Bitmovin, which are a video packaging software, which you probably never have heard of, most people, but it's a big company with massive success and huge success in the US market in particular. And that's almost been like a founding hub for many like professionals to leave Bitmovin and be like, I want to set up my own business, which was Kickscale actually, because Gerald was at the time working as a head of SDRs or BDRs at Bitmovin. And then what he did was he created a platform back then to help teach SDRs. And then that was like the first step towards what Kickscale is today. It's evolved many times, but I kept a close eye on that journey. But just the evolution of tech in markets that are more traditional. I talk about Austria because I know Austria, there's a joke we say, hey, if the world ends tomorrow, I'm moving to Vienna because it's gonna end 12 years after everywhere else there, right? So like Austria's a very traditional market, but Germany's similar, right? Like very traditional, very set in their way, not open to change a huge amount. Sorry, I know you're German, so my apologies, but just traditional business styles or whatever. How have you seen like the tech landscape evolve over the past 10 years, right? You've obviously worked with a lot of companies now. So how is it moving in Germany?
Very different dimensions to take an answer here. And yeah, it's evening filling,
Sure.
I think in general, we have a very strong and successful industry and like Mittelstand, we call it, SMB.
Yeah.
And there we see digitalization is still moving quite slow. If you take a look on the government side, also like I think we are, I don't know, place 25 in digitalization of governmental services in Europe. Yeah. So it's a mess. We are really moving slow. It's progressing. On the other side, we have very high education. So it's a very fragmented market in Germany in terms of universities, and there are some universities focusing on very few minor things. And there we get very strong talent. And we also see two big, let's say, centers of competence for software and new tech, which is probably Berlin and Munich. And if you really go deep there, you see a high degree of innovation, great teams, also more talent from the US is attracted here because cost of living is still low. There's a lot of capital, of course, going into Germany as one of the biggest markets in Europe. So if you're in the bubble, you see there's a lot of things happening. If you take a view on the whole market, then it's moving slow.
I think you probably say the same thing about Austria. However, I think if you're in the market, has been moving incredibly quickly. That's the if you're close to the bubble, you could see it has gone from 0 to 1 almost overnight. Like for something that was non-existent 10 years ago, I'm purely talking about the Austrian market, but probably Germany similar. Something that did not exist 10 years ago. There's now hundreds, if not thousands, of companies based all around Austria, right? So it's probably similar in Germany, right?
Very similar. And of course, if you like diversify by industry, you see some industries which are moving way faster and there's a lot of innovation happening. But you also see like more traditional industries getting more and more disrupted by vertical software solutions. Yeah, like lawyers, craftsmen, like really more traditional things are more and more adapting to tech. And I think it's a normal trend, and also shows what still big potential we have. I mean, we are still talking about transition from on-premise to cloud here, yeah. So everyone on media is talking about AI and like how to build agent systems. But if you take a realistic look here, there's big discussions going on of okay, which is the first CRM to implement, and if we move into the cloud. Yeah. So
Yeah.
reality and media, it's two very, very, very different worlds.
On premise, I did that. I had two separate conversations about this on prem versus cloud thing over the past couple of weeks. So one, the first one was about moving to the cloud, and the common misperception from the customer side, oh, that would be cheaper, right? Oh, definitely not. And two was everything that happened with AWS this week, right at the start of the week. The AWS and everyone being like, the cloud is the future. And then it's like, oh shit, maybe hold on, what happened here? Half the internet crashed on what was it, Monday? Like I was trying to log into Slack, and I was like, let me just log into HubSpot. Oh no, let me just get my social stuff out of Canva. Oh, wait a sec. It was wild, but interesting.
It was wild, but like as I remember, and I think this happened once in the last 10, 15 years. And if I run an on-premise solution, I would do the bet it happens at least the same time.
Of course.
The same amount of time. But of course, like this will heat the water again on all the guys who are really focusing on premise. I say, okay, you see what happens? You see what happened?
100%. Don't listen to them. Don't listen to the lies. It's gonna happen either way.
Yeah. Yeah. A little bit like the prepper mentality, yeah.
Yeah, for sure. Just one last thing before we finish up, because I know that you're heavily involved with ARRtist, right? One of the founders there, and also Circus. These are two big events that happen in Germany, right, around for SaaS businesses. ARRtist with ARR, so annual recurring revenue.
Yes.
What's the next thing that you see for events? I love events, by the way. I'm just going to put that out there. Events are still so important, but I'm hearing more and more marketers or C-level saying, oh no, events are a thing of the past. We don't need them anymore, which is complete bullshit in my opinion. But what are you doing to evolve those events?
I think it's really bullshit, Andy, because I think all the AI trends and automated customized messaging lead to a point where there needs to be built trust in the process of human interaction. Yeah, so you need trust, and if it's not can be done on a digital way, I think personal connection will be king. And I see a lot of sales leaders who now are renting cars again for their teams because they say, okay, meetings needs to be done on site. And they said, okay, we're doubling down on trade fairs because we can meet our customers in person. Yeah. So I think we are in the middle of the opposite. Yeah. After going online more and more during Corona and post-Corona, we now see that there is big impact on going offline. For event businesses themselves, I think it's unfortunately it's a hard game. You need to be big to earn money, and to be big usually counter injects a little bit against what you want to provide. It's value and valuable conversations. So I think we will see a few big events, like one or two leading events per industry, and then we will see a lot of very small, dedicated, curated formats. Done by software providers, done by agencies, where you really bring together just a small number of people, but in a very, very high quality format.
So yeah, that's interesting. We're already starting to see it with some of the local sort of industry events that we're seeing in SaaS, with just like a very small number of founders getting together, maybe 20, 30 people, a lot of face-to-face time, workshops. I'm even seeing some people like posting from the middle of the desert type of thing, of like a small group of people in the middle of nowhere type of thing. But that's the type of format where deals get closed. I think that's
sitting at the fireplace in the middle of a desert of Oman, yeah, and then you have like 6 hours of quality time to really get to know each other, to trust each other, to understand the solution the other one is providing, to understand the pains he's dealing with, and you can maybe offer something to help. I think this is the direction we are heading to.
Look forward to that invite to Oman, by the way. Don't forget me on the invite list, please. So, all right, Julius, thank you so much for coming on, mate. We've just hit time. It's been a real pleasure. And where can people find you first and foremost? Where's the best place to get you?
Usually it's LinkedIn. You will find me on LinkedIn, Julius Göllner. I'm happy to answer any questions, or if you have any ideas, happy to spare. Thanks a lot for the invite, and it was a big fun as always.
Sure, man. Sure. I'll make sure that all of your details are shared in the description of the episode. I'll get the team and so on to share it. And then also we'll share the episode with you afterwards, and you can do what you wish with it. All right.
Perfect, man. Perfect. Thanks a lot.
Thanks a lot. Hey guys, this was another episode of Growth Path. Tune in again next week for more great content. Julius, thanks a million, mate. It's been a pleasure.
Bye bye.